EOH is the largest enterprise applications solutions provider in South Africa. It's grown organically and through a number of acquisitions under the leadership of its CEO, Asher Bhobot.
Yeah, Asher has done a fantastic job. He's one of the people that gets nominated these days as, African Business Leader Awards, that kind of thing. The company just goes on hoovering up new players, but the core of the business is, of course, IT consulting with a strong focus on ERP. That's that SAP stuff, which they look at, enterprise resource planning. And it's done a lot of bolt-ons of companies doing networking, internet security, web, cloud, hosting, all sorts of stuff.
Market cap here, 19.7 billion rand, a PE ratio of 29.7, dividend yield of 0.8. Paul and I are always a little jealous of our friends who have had their businesses bought out by Asher Bhobot because they're sitting pretty. I don't know about yours, but mine certainly are. Any friends that have gone
no,
the EOH
I need to make new friends. No, not quite. Look, in terms of the fundamentals of the business, are phenomenal. I mean, if you're looking at this, not just the acquisitions that they're doing, but the organic growth has been nothing short of spectacular. And over and above that, they're very shrewd acquirers. So not only are they looking to be aggressive in terms of that space, but do so quite at pretty decent prices, which is good for shareholders.
Perhaps a buying opportunity. Look at that share price graph. That doesn't look right.
There's something wrong with that shareholder chart because it's actually trading at 136, not 64. So something's gone awry there. We'll have to change that one up. But it's been a spectacular 5-year success story. The most recent deal now to buy a company called CCS, which is in some other element. So that's the typical model, as you say, buying entrepreneurially driven IT businesses, bolting it on, giving those guys a bit of cash, but some EOH shares. Then it's earnings enhancing because the level at which they're acquiring those earnings is still relatively inexpensive compared to their high PE. So that just makes the next set of results always like 35, 50, 70% higher than the prior period, which is all very exciting. So it just goes on rolling. Then everybody's happy. The people who sold their businesses are happy. They're working hard. They've got 3-year earnouts or whatever. Everybody's getting rich together. It's a really fabulous success story. And of course, success attracts businesses and attracts customers, and everybody's loving it.
How does the value manager amongst us rationalize valuations on EOH?
Look, ultimately, any multiple is a function of the underlying growth and the cash flow generation and how sustainable that is. I mean, whilst it's got a 19 billion rand market cap, there's quite a bit of scope still for growth, especially given that they're going into my favorite part, which is the Africa and tapping into the Africa story, and looking to roll out what's been a very successful operation in South Africa into the rest of the continent. So in terms of scope and potential for growth, it's certainly there, great underpin for that growth going forward, and that's based on a quality management team that is really good at just growing organically and acquiring, as I touched on before.
There's no stopping this one.
Asher is a very hands-on kind of manager. He's got like an old school approach to business. He's really sweats the detail. He looks closely at what's going on in each underlying business. He's very good at finding and assigning people responsibility. He seems to be able to acquire these guys' businesses but keep them engaged and have senior leaderships, puts businesses together. So I think it's got a lot of internal momentum. The only thing that would stop this would be some sort of disastrous overpaying for some kind of a business and then an internal collapse and people fighting or a contract that goes bad. But he's not put a foot wrong for a long time. And I still think there's plenty of market scope growth here. So.
Let's call it hot or not.
Look, I don't think it's going to be the 10-bagger that it's been for the last couple of years, but I certainly still see upside in this, so I'm going to lean on the hot side.
Cool, hot.
Yeah, and I'm going to give it a hot on account of continuing this good trajectory as well, yeah.